This is binary options trading. Okay, this is a resistance break, as you can see here. This is a resistance break. You can see this is a resistance level. The price came here, retraced, came here, retraced again, came here, retraced, touched here again, and came back down. So you can see here, as the price came here, it formed a demand. It formed the demand. You can see the demand here. It formed the demand. So if the price comes to this demand, we can go in for a buy. But the price already started going up without coming to our demand. So because this is a practice session, this is not my real session, I will switch for my main account to my demo account. So I will try to lose this amount here and then we'll start with $100. Let's see how we'll be able to brew the balance before the end of the session. Okay, this is the first time I'm entering my demo account on this account. So let me switch the pattern to candles and the time to 1 minute. So you can see yes on 3 seconds. Let me see. 1, 2, 3. Okay, on 3 seconds. So I'll switch it to the normally I do trade with the 1 minute time frame. 1 minute. But this is let me use the flag mode because of I'll be trading using supply and demand. And I prefer using flag mode compared to other strategies. Okay, network is slow. Okay. So let's analyze this trading pair. This is 92% trading pair. Take note, all the pairs will be trading. The minimum will be 92% or 90%. So looking at this market now, what can we see here? I'll say this: the market is in a downtrend, but it has been ranging for some time now. You can see this. Market has been ranging. This is a resistance because previously when the market was ranging, here is a support. When it comes here to bounce up, when it comes here to bounce up, came to the resistance, bounce down, came to the support. But here it broke this support. As it broke it, it came here and retested it. So here has become a resistance. So as the price came and broke this resistance, it formed a demand there. I see this demand white with white pen. It formed a demand there. So as the candle came, I would have entered for a buy here with discount entry, margin of safety. And you can also see there's a gap down here. So we have entered for a buy and that would have been a winning trade. So let me go and add multiple pairs here at the upside. So by we looking at them one after the other. I'll buy. If it comes to this demand here, okay, cardboard. Now, why did I buy it? You can see clearly both here is one. There's a very green pattern. You can see there's a green candle followed by a red candle, followed by a green candle, followed by a red pushed up strongly to the upside sequence. Supposed to be this should have been a winning trade because we entered right here. Okay, so let's keep on looking at other pairs. Let's keep on looking at other pairs. Okay, now this is a shifting trend. This type here, CHF OTC. So on this kind of pair, you can take a look at this guys. The I took this trade. Remember demand, they are going for a buy. If it comes down again, no, it's too up. On from so guys you can see now it's coming here. If it comes down here, we're going for a sell. But I won't take this trade again. Guess why I said I won't take this trade again. Not that this level won't take trade, but why I will not take this trade again is because of the market is now shifting to the upside. You can see shifting to the upside. This trade will hold, but because it's shifting to the upside, it's a risky trade. There will be high risks for me taking this trade here. So me guys, see why I don't like this candle. That's why I prefer the OTC market because it's on 1 minute. See it. I think it was on 1 minute. I would have won all these trades. I would have won all these trades, but see this candle now is just to the downside, and this might end up. Don't know, guys. Let's see how it plays out. But based on my analysis, I know that this candle will buy. That's why I came to this demand. I entered heavy on this trade. See that, guys. Now, whatever I'll be doing, anytime I switch over to this pay, I'll be going with only 1 minute. I'll switch it from the flag mode to the main candle on 1 minute. Okay, that's the joke, guys. Now, I think it was the flag. So I think it was the flag mode. I would have one of the trade right on this candle. So what I'll be doing now, I will switch over to 1 minute. Anytime I'm on this pay, I will change to 1 minute. Yes. Okay. Now let's check other trading pairs. But here you can see now there's a pattern that this a you can see the bearish flag. This is a bearish flag pattern, and now it has broken the trend line. So as it has given us a retest here, I'm expecting the market to keep selling to the downward directions. I'm expecting the market to keep selling. But before it sells, I'm expecting to come to this supply right here. I'm expecting to come to this supply right here. Once it enters this supply, I'll go in for a sell heavily on this. Maybe for the $157 that is here, $57,000, I'll go all in. So I'm expecting to sell right here. If it comes up, okay, I wasn't able to catch the sale. I would have entered over a sale right on this next candle because the market is beginning to sell. This guy is started moving to the downward direction. I see it. You can see it came into this supply area here and that started to sell. If it breaks this level, I'm going for a sell on 2 minutes. If it breaks this level, if it closes below this level here, it didn't close below the level, but while I waiting for this sell, you can see there's a gap up here. There's a gap up, an inside gap here. So I'm expecting to push it downward. I'm expecting the candle to keep going in the downward directions. expecting it to sell because this market is in a downtrend. We can see the overall trend. Let's go to the 3 minutes time frame and confirm the trend. So you can see the market is in a downtrend. So I'm expecting to sell for 2 minutes. I'm expecting to sell. Expecting this candle to sell. I think I took it for 1 minute. I would have won this trade, right? But I'm still expecting this one to push down, to continue going downwards, continue moving in the downward direction. I'm expecting to sell. Wow. Also expecting this year because I was expecting this year. I was expecting this year because you can see the market is in a downtrend. Okay, I'll go in for 1 minute here. We lost that trade, right? I don't want to miss this sell. This market will sell here. Okay. Now take a look at this candle pattern. This candle pattern here usually gives retracement. This candle pattern here usually give retracement. This candle pattern here usually give retracement. And we're also in a downtrend. I'm not seeing any reason why the market, especially on the upside, apart from this demand area here. I'm not seeing another reason that will make the market to push to the upside apart from this demand area here. So let's watch what is going to happen in this market. Okay, it wasn't respected. It didn't respect it there. Okay, guys. After this candle, I'll go for a sale. But after I go for a sale, I'll tell you guys the reason why I went for a sale. I'll, I'll go in with the entire balance. Okay, so just when this candle closes, I'll go in with the entire balance. And I'll tell you guys the reason. Well, I'm already late on this trade. Now,